Okay, welcome back everybody. Thank you so much. So let's get started. So you've just completed this task and I just want to quickly go through the answers with you. So thank you. This is the last one in this set. So last upload, you'll be pleased to know. So what we've got then here is the answers to what those questions were asking you. To find the median, basically you have to put all the numbers into order and then find the number that sits in the middle. That's how you work out the median average. So you'd have all the numbers all in a row and then the one that sits in the middle is the median. Okay? How do you calculate then or account for the differences in the median average? There are lots of reasons why there is different median incomes. It can come down to how much people get paid, so the types of industries that are within areas and regions. It can come down to the quality and the educational level that someone has received. So do they have a degree? What type of degree is it? Where did they get their degree? And the value of their qualifications will have an effect on the median earnings. The background that someone is from will affect how much they can earn. As you know, people who have a supportive household will obviously, in most cases, do well, whereas those people who have a disrupted, for example, situation, they might then find that their quality of education is affected, and that may then impact on their earnings. There's a big conversation at the moment around students not being in school and how the coronavirus lockdown is going to affect earnings. So there's lots of different things that will affect people's earnings. But on the whole, when you're thinking about what makes it different, you're looking at regionality. So where is somebody based? Where do they live? You're looking at aspects such as what kind of education they had, where is their education from, the quality of their education, and then any other factors sort of like regionality, the skills that they have, the age that they are, they will all affect the earnings. As you can see here, with the pandemic situation that we're in, and you think about key workers, when you saw the average earnings on the slide before, and then you see the earnings of, say, the median earnings of key workers, it's quite surprising, isn't it, when you look at the average earnings of people who are doctors, nurses, well, not doctors, nurses, paramedics, childcare providers, care workers, and so on, how their earnings are significantly less. And yet those key workers have been vital in keeping the economy going. So we have what are called human capital. Now, the human capital are the skills, the qualifications and the experience that a worker will bring to an economy. And their skills and that wage that they earn is the value which they bring to their income. Now, that skill that they provide and the way that that wage is provided will form that person's income. The skill of the worker, and dependent on the skill set that they have, can tend to be inelastic. And what I mean by that is the more in demand that skill set is, and the number of people available in the market who provide that skill will determine the wage rate that they are able to achieve. Somebody who has a very specialist in-demand skill set can demand a higher wage, and their wage will be very inflexible, so inelastic, and as a result of that they can increase their wage price and bid it up every time. The more workers there are, the less they're going to get paid. And obviously, if I'm very well skilled, very well qualified, lots of experience, I'm going to get paid more than somebody who isn't. So workers can increase their human capital and their value to their income by gaining experience, by being trained, getting good qualifications, getting a good degree, and so on. And those elements that add to their value as a human then leads to wage differentials between workers. Now, you may well like it or not, but that's the way it sits. Moving on then. So wage differentials exist between workers, and the reason that is because there's a different demand for different supply of labour, and this creates different rates of work. High demand and low supply labour force will mean that the wage will be inelastic. Low demand and high supply will mean that wages are elastic, and therefore the wage rate can be pushed down. So if there are lots and lots of people who are able to do that job, then therefore the wage rate will be much lower. Skilled workers will be able to earn high pay, unskilled workers obviously will earn less. So the distribution of income will be in their favour. Okay, so we have different sources of wealth. Recapping again, we have wealth, inheritance, savings, entrepreneurship, and also on this one I put by chance, because sometimes wealth becomes there through chance, through circumstances, through the situations in which somebody finds themselves in. So sometimes you have to count in a little bit of chance. Causes of inequality can be, again, inheritance, marriage, income inequality, and again chance, bad fortune. So there's different causes of inequality between households, and these can lead from government policies, taxation for example, in regards to how tax is applied to wages and the effect of that taxation on people's earnings. So that could be a factor. Wealth inequality, more people owning more stuff, and as a result of that they gain more wealth. The number of people living in a household and the household makeup will also affect the inequality between households. For example, if you've got a large number of people who are, for example, unable to work within a house, then obviously that's going to affect how much they can earn. And that's through no fault of their own, but that's just how inequality is showing itself through opportunity. You can also get inequality through opportunity because the poorest in society tend to live in poorer areas where values such around education is lower and less than what would be the national average. So poorer families receive sort of a substandard level of education, and therefore as a result of that are likely to remain poor. There is not equality of opportunity among populations, and so it's very difficult to families to lift themselves once they're in that position out of poverty. We've then got, obviously, as I've talked around, the level of skills and qualifications. And just here I've got a video that I'd like you to upload, and just have a watch of that, please, so that you can see a little bit more about inequality and what inequality is. I'd like you to have a go at doing this task. So this is looking at an activity which is in your How the Economy Works book. I'd like you to answer the question for me, please, and just explain how the brothers earn their income in the form of the assets that they own. I'm going to pause it there. When you've done it, it shouldn't take you more than 5 minutes. Once you've read the extract, just write down 4 assets and just a brief explanation of how the brothers earn their income. All right, moving on. So here's the answers. Their assets are a part of their wealth. So they own a penthouse flat, the Shield Brewery, a restaurant and the complex. This is how they what their wealth is, and how they earn their income is from their assets. So the assets give them a flow of income in terms of the profits that each revenue stream brings in. So they get money from the brewery, they get money from the restaurants and the complex. Okay? So there are different factors of distribution of wealth: inheritance, income and marriage. So inheritance is many people are born into wealth, and therefore wealth is left to them from relatives, parents, grandparents, aunts, uncles and so on. An inheritance is the money that people who have passed away leave to someone when they've died, and that inheritance then can make someone wealthy. Some people have a lot of things that they have accumulated over their lives, and then when they pass that on to their relatives. Income, as people get older and are able to earn more, they're then able to gain more wealth because we're able to buy our homes, we're able to improve and acquire that wealth through property. And then we have marriage, and people often marry into wealth. Commonly weddings are usually with people who are of a similar standing, and so people who are wealthy will marry into wealth. And there we go, marriage is a way of earning a lot of money. I've got a couple of articles here for you to have a look at, so when you come back to this lesson I'd like you to just go back and have a look at those. The consequences of inequality is a very quick section within this slide, because you look at inequality in its own right. But when you're thinking about inequality, and as I've talked about, often you'll find that people who have grown up in inequality, and those poorest in societies, tend to live in poorer areas within the UK and the rest of the world, that they are trapped within that situation, and this is called the poverty trap. They're unable to improve themselves because of the society in which they live. Society continues to pull against what they want to do, and then they find themselves unable to elevate out of poverty. So there are lots of unequal distributions of income and wealth, and there are the problems that that creates in itself, things like social crime, antisocial behaviour, tensions amongst communities, populations, tensions against the government, which then create riots and vandalisms to their home areas. So where they live, they tend to rise against, and obviously then find that it's their own communities which are then wrecked as a result of that antisocial behaviour. You also end up with a significant reduction in happiness, and then that leads to ill health, and whether that's through ill health through being unhappy, or whether it's ill health through other ways. So because we're poor, we can't afford to buy balanced meals, and so cheap food, mass-produced food, is much cheaper than it is to have a home-cooked meal. So as a result of that, because it's mass-produced, it contains a lot of saturated fats, salts, sugars, which then leads to obesity. And so you end up with lots of significant factors affecting individuals who live within that society and that region and those neighbourhoods. So income will be redistributed back to high earners with increased savings and wealth. And there may be increased investment as a return for entrepreneurs and the taxes that they pay. Here we can see how the rich are getting richer when you look at the UK as a whole. And again, as I said, we'll look at the inequality elements and how inequality affects it. But it's important for you to understand the differences between income and wealth, and how the richest with the wealth are the ones that continue to get richer. And then you can see how that spans across the rest of Europe. So when you look at the UK, and you can see that we've got the 2000 and the 2015 data here, that you can see how fast the richest in society between 2000 and 2015 has grown in comparison to the rest of Europe and the rest of the world. We've got the USA there and South Korea. It's quite surprising, isn't it, when you look at that data, how rich the richest in society. And you can see this from the Office of National Statistics. So I want you to have a look at this data. I'm going to pause it there. An activity for you. Can you identify two main features of this data? Alright, so as you can see, similarly to the data that I showed you earlier on, you can see how the richest and those with the total wealth are populated around the southeast and London. So you can see that the greatest amount of wealth is held down in the southeast, with 15.5% holding the greatest amount of wealth. And then as you move up north, we have the north-south divide and that existence that's there. So hopefully you've got two pieces of information from this. The southeast is the most wealthy, London is the second most wealthy, and then we've got the southwest, which is then the third most wealthiest. and the poorest in society with the least amount of wealth are those living in the north. And yet that's quite surprising when you think about those oil fields that sit on the north coast of Scotland. Anyway, moving on, different topic. So, how can countries improve policies, and what do they do to try and tackle inequality? Well, these are photographs of Jakarta, and you can see the differences between the poverty that exists. These are all shanty towns below the rich parts of the city, and Jakarta is literally divided, as you can see here, by one road, and you've got the slums of the rest of them, the rest of the population, and then you've got the rich living on the other side of the road. And my question to you is, how can government policies tackle inequality? I'm going to leave it there and give you a chance to answer that question. Okay, so governments try and tackle poverty and inequality through lots of different ways, through things like job creation to try and improve opportunities for people to get work and proper paid work, through social housing and people having a place to live so that they can actually start to build a life. They do things like providing healthcare, education, so that those people are able to have a better, affordable healthcare and medicines, so that they can then have their health problems alleviated to then enable them to work. And improved education. By providing people with an education and the skills that they need, they can then elevate themselves out of their circumstances into good paid jobs. And things like youth training schemes and things like that are there to enable people to be able to access that even once they've left school. So we've got different parts as well. When you're thinking about taxation, we've got a regressive and progressive taxation system. That affects individuals within society, and things like the National Health Service and Job Seekers Allowance and the welfare benefits that people receive tries to redistribute the income from the richest to the poorest in society. And the intention of that is that those who don't have any money at all are able to get some form of standard of living. Now, this is represented through what's known as the Lorenz curve. And the Lorenz curve is a diagram which is shown here. And the Lorenz curve is an example of how poverty is shown. And as you can see on this diagram, you have perfect equality. So on the straight line, this is where everybody is equal. And then on the Lorenz curve, which is the curved bit that forms that arch, is the inequality. And this shows the depth of inequality among people. The Lorenz curve is just a diagram just to inform you. So if there was a question that ever came up about what is the Lorenz curve, you can say that the Lorenz curve shows and it is an example of how inequality is shown within a diagram. You don't need to actually be able to draw the Lorenz curve. It's just a geographic representation of the degree of income or wealth inequality within a country. And income distribution is measured by using the Lorenz curve. It shows the percentage of income earned by a certain percentage of the population. And the line of perfect equal distribution of income basically means that every single person along that line earns the same amount. So that straight line is perfect equality. However, the Lorenz curve shows you that 50%, for example, of the population are earning less. And so as a result of that, it shows that we have a disproportionate percentage of people who are moving away from equality into inequality. Just an example. You don't need to know how to write it. You just need to be aware if it ever came up as what is the Lorenz curve. So last part then now, last bit, 10 minutes. I'd like you to just answer these questions. And then once you've done that, there is some multiple choice questions in your How the Economy Works booklet. Well done, everybody. Thank you so much. And we are done. And I will see you next week.